Hi, everyone. Welcome to Unhyped Stocks. Today, we're going to be talking about Adobe stock. This one is very interesting because the stock has absolutely been crushed. And today we're going deep into it. I mean, really deep. And we're not just going to look at the P ratio for 5 minutes and call that a research. Okay. The market has a pretty clear story by now. AI fears, slower growth, more competition, people talking about Canva, Figma, and whatever else creative new tool that comes up. Okay. So maybe the market is right. But before we decide, we want to understand what the business actually is. Okay. It still generates huge amounts of free cash flow. It's still one of the best margin software. It is still very deeply embedded into major enterprises. So today in this video, I'm going to break down Adobe properly. We're going to find out what Adobe actually is, because Adobe is not just Photoshop. Then we're going to be talking about Creative Cloud, Document Cloud, the Experience Cloud, and then the moat, switching costs, the closed loop between all of these products. And then we're going to talk about AI, competition, and then finally, I'll open stock analysis and go through the actual numbers, revenue margins, free cash flow, buybacks, share count, returns on capital, valuation, pretty much everything. And by the end, I want you to understand one thing very clearly. Adobe is not Photoshop, okay? Adobe is not a set of features. It's not even close. So if you're one of those people who has heard, oh, Canva is attacking Adobe, it's like, no. That's like saying, oh, Linux could sometimes take over Windows. So what? You know what I mean? So what? Microsoft brings in like $300 billion in revenue per year. Windows is like 10% of that, not even like 20 billion. Okay. So what's that? It's not even 10%. Same with Adobe. And so we're gonna talk about what Adobe is first of all. So if you think that Adobe is basically Photoshop, Illustrator, Premiere Pro, and a few creative apps, you're making the same mistake as saying Microsoft is basically Windows. Okay, Windows is only one part of Microsoft. Microsoft has Azure, Office, Dynamics, security. Microsoft is huge in cybersecurity, by the way. Databases, developer tools, okay? Enterprise infrastructure, okay? This is an entire machine sitting underneath a modern business. This saying Linux is a threat to Microsoft just because it competes against Windows and people get annoyed with Windows nowadays is ridiculous. Okay. Microsoft, it's like more than $3 trillion companies right now, getting threatened by something that could possibly not even have like a 500 million in market cap if it would be. It's open source anyway. But anyway, let's take a look at Adobe with considering that analogy. So when someone says Canva is going to destroy Adobe, that's just ridiculous. I find it absurd and ridiculous and lazy and very stupid. Okay. Because Adobe is not Photoshop. Canva is a nice design tool. Hey, I used Canva when I'm making some of my thumbnails on YouTube, and I'm not going to use Adobe. Adobe is very expensive, but I understand that I'm not the target customer for Adobe. Okay. So Canva is easy to use. It's cheap. You can make like a birthday invitation, an Instagram post. Okay. That's great. And by the way, Adobe already competes for those type of customers anyway. Adobe Express exists. Adobe has free products. Adobe has simple AI tools. So that's not the customer I care about when I analyze Adobe. I care about where the real money comes from, which is major corporations, huge enterprises, professional creative teams, advertising agencies, okay, marketing departments with hundreds and thousands of employees, companies managing millions of digital assets, okay, companies managing customer data, advertising campaigns, e-commerce, contracts, documents, approvals, analytics, and personalization. That's Adobe. And once you understand that, the company starts looking completely different. Once you get into the history of the acquisitions that Adobe has made, and when someone else comes along and says, yeah, Canva is a competitor to Adobe, it's like, yeah, sure, buddy. You're not even going to be able to start to explain to that person because Adobe is very complex. It's not so difficult to understand. It's fairly easy and simple to understand, but it's very complex. It's a huge business, okay? So Adobe has three major worlds. Number one, creative, and then it has document, and then it has the customer experience stack, which the customer experience reinforces the creative stack. Okay, so the creative stack is the very obvious one: Photoshop, Illustrator, Premiere Pro, After Effects, Lightroom, InDesign. This is the part that everybody knows because it's visible. You don't make images, okay? You make images, you edit videos, you design things. So naturally, people just look at this one piece of Adobe, and they just decide that they understand the entire company. They don't. Okay, you have document cloud, PDF, electronic signatures, document workflows, permissions, approvals, security, contracts, forms, files moving through companies every single day. This is not particularly exciting, but and that's why people don't really talk about it. But corporations care a lot about more whether their document infrastructure works rather than someone made a prettier Instagram graphic using some other tool rather than Adobe's tool. Okay. So you have the creative cloud and then you have the experience cloud. And this is where Adobe becomes much bigger and much stronger when it comes to the vertical, deeply embedded mode. Large companies use Adobe to manage customer data, websites, content, personalization, marketing campaigns, analytics, customer journeys, digital commerce. Okay. So Adobe isn't just sitting in a tiny corner of a company helping someone to edit a photo. Okay. Adobe can sit across the entire digital content chain. So think about this. Content gets created by using Adobe products. Documents get managed by Adobe products. Customer data gets collected. Experience gets personalized. Campaigns get distributed. And then results get measured. And then the whole thing starts again. This is why it's a completely different business from the people imagine when they hear Photoshop. Yeah, Photoshop is a tool. But that distinction matters enormously because if Adobe was just Photoshop or Premiere Pro, I would personally be much less interested. Someone could just make a cheaper image editor and be a threat to Adobe. Someone could bring some new AI features that are better. Okay. Someone makes a better video editor or whatever. Then we have a problem because the moat is under attack. The margins are going to come under pressure because they're going to try to compete on price. So, but when Adobe is embedded deeply and vertically across creative workflows, document infrastructure, marketing systems, customer data, and enterprise content management, then replacing Adobe is a completely different exercise to think about. Okay, you're not just replacing an app. You're pulling pieces out of an enterprise system. And systems are much harder to replace than features. And that's what Adobe is all about. Systems on top of systems on top of systems. Okay. So remember these three major worlds: Creative Cloud, because we're going to talk more further in this video. Creative Cloud, the Document Cloud, and then the Experience Cloud. So the investment question isn't if your stay-at-home mom prefers Canva over Adobe. Okay. The stay-at-home mom is not the target customer for Adobe. And a lot of you people, I've seen people in the comment section in YouTube, oh, Adobe it costs so much. It's like $80 a month or something like that. Well, if you're a major enterprise and you pay $80 per machine to use the licenses for the software, and you make thousands of dollars in return by marketing and using ads and creating stuff, then $80 isn't that much for paying for the licenses. But if you're an amateur at home, you just want to edit some photos, yeah, $80. If you don't get any value out of it, yeah, it's a lot. But you're not the target customer for Adobe, my friend. Just use Canva, okay? Adobe doesn't care. It's like, hey, we also have Adobe Express, which is free. Just use that one. All right, so next we're going to talk about the Experience Cloud. Now let's talk about Creative Cloud, okay? This is the part where pretty much everyone knows Photoshop, Illustrator, Premiere Pro, After Effects, Lightroom, InDesign, and a bunch of other tools. But again, people make the same mistake. They look at each app and each of these features separately, and they ask, is Photoshop still the best? Okay, is Premiere Pro better than DaVinci Resolve? Can Figma replace Illustrator? Can Canva replace this and that? That's not the point, okay? Adobe already won because it became the standard tool set for professional creative work. And standards are powerful. When I invest, I'm looking for infrastructure, standards, and stuff like that, which represents embeddedness, vertical moats, wide horizontal moats. Okay. If you're a designer, if you're a video editor or a photographer, it's the same thing. There's a good chance you learned to work on Adobe tools. When a marketing team of a big corporation or a huge enterprise is going to hire people, they're going to demand that you know how to work in Adobe tools. You know why? Because they already have another part of the team that they're going to work in Adobe and they want to keep it consistent. If you just know how to work in Canva, you're just not going to get hired. You have to work with Adobe. And that matters because Adobe is a standard. Companies don't want to retrain entire teams every few years because a new app looks shiny like Figma. Okay. They want tools that everybody and everyone already understands. Okay. They want compatibility. They want reliable workflows. They want files that can move between employees, freelancers, agencies, and clients without breaking. Okay. How are you going to do that if you have a part of the team that works with Adobe products and they have Adobe format, and then the freelancers, they might use Figma or Canva, and then the agencies, they work with Adobe again. Everything is going to break. It's not going to work. You need Adobe everywhere across the workflow. Okay. So Adobe sits in the middle of everything. Photoshop isn't just a Photoshop file, isn't just a picture. It can be a part of a much larger workflow. It can move into Illustrator and then into After Effects and then into Premiere and then into a marketing campaign and then into a website and then into an advertisement and then into a customer experience. And the same thing happens with video, photography, design, publishing, and branding. So this is where Adobe becomes just a lot more than just a collection of apps, okay? It becomes a professional language. Think about Microsoft Office. A lot of institutions don't just use Word because it's proven that Word is the greatest text editor ever created, okay? They use it because everyone else uses it. Your company uses it, the coworkers uses it, the clients use it, the files are compatible, the workflows is already built around it. That's the same way Creative Cloud works. So Adobe has spent decades becoming very deeply embedded in creative industries. Schools teach it, agencies use it, freelancers use it, large companies use it, clients expect it, plugins are built around it, entire careers are built around knowing these tools. That creates inertia, okay? Inertia is valuable. Now, does Adobe have competition? Yeah, sure, obviously. Parts of Adobe are being attacked. Canva, Figma, DaVinci Resolve, Affinity, Final Cut, and a lot of other smaller tools. Some of them are excellent. Some of them are cheaper. Some of them are easier to use, more intuitive. Some might even be better for specific jobs, but that doesn't automatically that doesn't destroy Adobe, because the moat that Adobe has is not, Adobe doesn't try to have the best feature in every category. Adobe's moat is being part of the workflow. Okay. And once a company or enterprise has hundreds or thousands of employees, years of stored files, millions of files, templates, plugins, processes, training, outside partners, all built around this ecosystem, then changing software because it becomes a much better, bigger decision than just downloading an app that is cheaper. Okay. That's why I care very much when someone tells me Canva added this feature. Great. Probably Adobe has something similar already. So even if Canva does one thing better, that doesn't mean a multinational is just going to rip out the entire ecosystem and the entire infrastructure to put Canva in tomorrow morning. Okay. So professional software is not a popularity contest. Okay. It's infrastructure. And this is the type of company I want to be invested in. Infrastructure. Creative Cloud has spent decades becoming one of the default infrastructures for creative work. All right, so the embeddedness moat. Let's assume that Adobe is already the standard, okay, which it is. What happens after a company uses Adobe after 10 years? Okay, this is where the moat gets stronger. Over time, companies build things inside Adobe, inside the Adobe ecosystem. Think about templates, libraries, brand assets, project files, plugins, automations, internal processes, approval systems, integrations with other software as well. And then all of that stuff starts piling up. And the longer the company uses Adobe, the more expensive it is to unwind. This is a part you need to take into consideration, the switching costs. Okay. It's not just the monthly subscription. That's why Canva can be for free. And huge enterprises that have been working with Adobe for decades is not just going to switch just because something new and cheaper came along. Okay. The switching cost is everything attached to it. A new competitor can copy a feature. It can even undercut Adobe on price. It can even build a better tool for the specific job, like Figma, but it cannot instantly recreate tens of years of accumulated workflow inside of a company. That is the embeddedness. That is the moat. It's not just the software. It is the structure built around the software. And once that structure gets deep enough, Adobe gets much harder to remove. So what happens if a company actually tries to leave Adobe? This is where switching costs stop being theoretical. Okay, so let's talk about it. So first, you have migration. Okay, years of files have to move. Templates have to be rebuilt. Plugins have to be replaced. Automations have to be recreated. And then you have training. People already know Adobe, already know how to work on it. They have learned it in school. Okay, you either have to retrain those employees or fire them and find some new ones that could work on the new tools that you want to migrate to. That means a lot of time. Even if you retrain them, that means a lot of time. If you fire them, I mean, I don't know about the legality of it. I'm not sure how that works, but that just means a much lower productivity. That means a lot of mistakes, compatibility issues. Clients will still need to use Adobe files. Even if you switch, your clients are going to probably still use Adobe. Are you going to force all of your clients to switch as well? Agencies will still use Adobe. Freelancers are still going to use Adobe. So after you switch, you may still need Adobe anyway. That's the biggest problem. Nothing can break. This is a real business. Deadlines still exist, okay, for these businesses. Campaigns still have to launch. Customers have to be served. You cannot just shut everything down for 3 months because someone found Canva, which is cheaper, okay? So switching an app might save money on software licenses, but the disruption within a company or an enterprise can cost far more than the subscription ever did. This is why switching costs matter. Not because leaving is impossible. In theory, is it possible? But leaving Adobe ecosystem is just economically very stupid. Okay, that's the moat. And Adobe is a great company and has great margins and has become so large and is such a good company because it creates a lot of value for others. maybe not for you, or your stay-at-home mom, or some 17-year-old girl that makes some Instagram post, okay? But for enterprises, marketing teams, think about PepsiCo, Nike, even governments that have to recreate a flag somewhere. They need color accuracy and stuff like that. They're not just gonna switch because some new app is cheaper, okay? Now let's move on away from Creative Cloud, okay? Because Adobe has another business and another stack that people just underestimate, and they don't even take it into consideration, which is the document infrastructure, PDF. Okay, PDF is everywhere. Contracts, invoices. I mean, I just worked with stockanalysis.com. They asked me to send an invoice using the PDF format. So PDF is everywhere: contracts, invoices, financial statements, government forms, legal documents, medical records, applications, reports. Basically, every serious organization uses PDF constantly, okay? And Adobe created this format. Now, Adobe doesn't make money because every PDF on earth has to pay Adobe some magical tax, okay? That's not how it works. The important part is what gets built around the format: Acrobat, editing, electronic signatures, security, permissions, approvals, sharing, document workflows, and then you have audit trails, okay? Archiving. Now imagine this inside of a huge company or even governments, thousands and thousands of employees, millions of documents, legal requirements, compliance rules, signatures, approvals, sensitive information. Suddenly, Acrobat isn't just a PDF reader, okay? It's part of a document infrastructure, and this is exactly the kind of business that I like. It's boring. It's very deeply embedded. It's everywhere. It's necessary, and nobody just wakes up excited because their company uses PDF, okay? But if a document workflow stops working, people start to notice very quickly, and this is what matters for me as an investor. The product doesn't have to be exciting. It has to be useful, that companies keep paying for it. And Adobe has built decades building itself into that workflow. Now we get to the important part of Adobe, because this is the part of Adobe that most regular investors barely understand. And I didn't even know this about Adobe before, when I started researching, and I saw the list of acquisitions that Adobe was making. I didn't really understand those acquisitions, like Marketo, Magento, recently Semrush. But I took a deep dive into analyzing those acquisitions and trying to figure out, what is Adobe building here? Why is it making those acquisitions? So this is the Experience Cloud, okay? This is not Photoshop. This is not PDF. This is enterprise marketing infrastructure, okay? Large companies use Adobe to manage websites, customer data, marketing campaigns, personalization, analytics, digital commerce, customer journeys, okay? So basically, Adobe helps companies understand who their customers are, what they are doing, and what content they should use, and whether any of it actually worked. This is a huge business, and that's why Adobe keeps on growing and growing every single year, and that's why AI coming, or Canva, it's a joke. I mean, let's get into analyzing some more here. So let's say a customer such as a bank, okay, um, is not going to make some birthday invitation at home. So they're not just going to use Canva, which is cheaper, okay? Global retailer is the same story. A large media company, multinational brand, okay? Nike, PepsiCo, Walmart, okay? A company with millions of customers interactions every single day. They need to manage that somehow. And Adobe sits inside of that process, okay? And that's why I think people massively underestimate Adobe. They look at Photoshop and ask whether Canva is better. It's like irrelevant, completely irrelevant, because Adobe is helping giant enterprises to manage customer data, websites, content. They manage campaigns, analytics, and commerce at a huge scale. Okay, this is a completely different level of importance. And once the experience cloud is connected to the creative cloud and the document cloud, the whole Adobe machine starts to become much, much more interesting. Now we connect the three worlds, okay, the three stacks. This is where Adobe becomes much, much more interesting. And this is what makes me sleep very well at night. I could put like 90% of my net worth into Adobe stock and I'm going to sleep like a baby. Okay. So Peter Lynch always says, know what you own. Okay. This video was actually very easy for me to make because I just put hundreds of hours of research into Adobe stock. So I know it very, very well. And this video wasn't very hard for me to make because I just understand Adobe. So this is where Creative Cloud, okay, creates the content, and then the Document Cloud manages the documents, and then you have the Experience Cloud, which distributes, personalizes, and measures what happens next. So imagine a large company, okay, PepsiCo, Nike, Walmart, whatever. You have a marketing team, okay, that want to create some kind of upcoming ad, okay. You do that in Creative Cloud using Adobe tools. Now that content that they just created, it gets stored and then it gets managed, okay? And then it gets approved and then it gets published onto a website or an app, or it's some kind of email campaign, or it's sent to an ad platform, okay? You have different customers that see different versions, and Adobe sits in the middle of that, okay? Adobe tracks everything, sees what it performs better. The data comes back to the original enterprises, and the company now knows what worked and what didn't. And that tells the creative team what to make next, okay? So the loop starts again. They create, they manage, distribute, they personalize, they measure, they monetize, and then they create again. So this is the part where I really like, because each stack enforces one another. Adobe is not just selling tools at a random, okay? Yeah, basically, you need to stop thinking as Adobe as just a set of features and a set of tools, software tools bundled together, and you get like you pay $80. No, that's not Adobe. Okay, Adobe has a stack that a company uses, and it gets more and more useful as the whole system um, gets used. Oh, okay, it gets harder and harder to replace one piece without affecting the rest. This is why I like a lot about Adobe Machine. It's not just Photoshop alone. It's not Acrobat alone. It's not the Experience Cloud alone. It's how all of these pieces connect and reinforce each other in terms of moat and embeddedness and switching costs and everything that we talked about previously. Now, here we get to the part that destroyed the valuation of Adobe. But first of all, I just have to mention stocks never go up in a straight line, okay? And also the valuation doesn't just remain flat, okay? Valuation can go up a lot and a company can get very overvalued, but it also can crash to some ridiculous lows. Just because it was very overvalued in the past and it was very loved by the market, and the market assigned a very high multiple to it, it doesn't mean that it just needs to maintain a similar high level over the years. So Adobe went up in the 2021 mania to a very high valuation, then it crashed, and then it went sideways for a couple of years. And here we are still down 60% from all-time high, dirt cheap valuation. And the thing that's keeping people from buying this is AI. So this is the bear case, okay? And is it a real one? I don't think so, but let's analyze a bit. So AI makes content creation easier. Images get easier to generate. Videos are easier to edit. Design gets easier. A lot of basic creative work gets cheaper. Okay, so the obvious argument is creating content that becomes easier. If creating content is easier and easier over time, does Adobe become less valuable? And I think that's just way too simplistic. I mean, because easier creation probably means more and more content gets created. And a company that used to make 10 versions of an ad might now make 1,000. Okay. Different countries, different customers, different languages, different platforms, different campaigns. Okay. Still, someone has to manage that. Someone has to organize that, approve it, check the rights, protect the brand, distribute it, personalize it, and then measure what actually work. And this is exactly where Adobe already sits. So yes, AI can attack parts of the creative cloud of the feature tools, Photoshop, Illustrator, and so on. And you should take that seriously, but it's the bear case that people feel right now and that they have is that it's just too exaggerated, because AI can also dramatically increase the amount of digital content moving through Adobe's ecosystem. So Adobe is not sitting still either. They have Firefly, okay? They are adding AI into Creative Cloud. They are adding AI into Experience Cloud. They are adding AI into enterprise workflows. So the real question is, does AI compete with Photoshop? Obviously it does. Does AI compete with Adobe? Does it destroy Adobe position inside professional and enterprise workflows, or does it reinforce it? So that argument is not so easy to make, or to the answer is not so clear to those questions. AI might reduce the value of some individual features, but it could also increase the value of the entire system that controls and all the content that AI creates. This is the part of Adobe I care about. Okay, so now we get to the actual investment case. Why do I own Adobe? I just own it because I think the market is very, very wrong and the stock has been punished a lot. And you need to keep in mind, I mean, recently in the news, there was some young kid blowing up like tens of billions of dollars into some hedge fund that he manages. He was shorting the software stocks, like he was shorting the index of the some kind of ETF or index, or I don't know, individual names maybe, and he was long semiconductor. So he was long AI, and he was short the software names. I mean, this is obviously just gonna blow up in his face. I think a high percentage of the float is shorted right now for Adobe. That's gonna very quickly change, okay? Because the company is still growing. The market thinks that the growth is going to slow down. It's actually accelerating. We're going to take a look at the numbers next. So there's AI risk, competition, and people just see that the stock has absolutely been destroyed. They stay away. I see a company that is still very, very strong, still very deeply embedded, highly profitable, expanding margins, still producing huge amounts of free cash flow and growing that free cash flow year to year. I started looking into Adobe early 2025, and it's just been growing since, while the price has been dropping. But yeah, it's been buying back stock aggressively, and this is great. And the management is just pushing the business forward into the future. Okay, Adobe just completed the acquisition of Semrush, which just strengthens the Experience Cloud side of the business and adds more CEO, brand visibility, search intelligence, and AI search capabilities into the stack. And that matters because Adobe keeps closing more loops. Create content, manage it, distribute it, measure it, understand whether people can find your brand in search and AI results, and then improve that again. And Semrush deal fits directly into that. It reinforces the Experience Cloud instead of being some random acquisition bolted onto the side. Okay. So Adobe is already much stronger on AI than people give it credit for. Firefly is built directly into creative workflow. Adobe is adding AI into Experience Cloud. It's building AI search and brand visibility tools. It's combining all that with customer data and content systems that it already owns. So that's why I don't look at Adobe as some old software company desperate to try to survive AI. Okay, it's not desperate. And this is not desperation I'm seeing. Okay, I see a company with a very long history of winning and adapting. They moved from box software to subscriptions. They built the creatives cloud. Okay, they built the document cloud. They built the experience stack, and they keep acquiring pieces that make the stack stronger. And they have an excellent track record of turning those pieces into a bigger ecosystem. That doesn't mean management gets everything right. Okay, nobody does. Nobody's perfect. But this is not a company that just spent the last 20 years sitting still. Okay, yes, the growth has slowed since 2014 when they switched to subscription. The AI threat is real. Competition is real. But I think Adobe has proved, to me at least, that it can defend its position. And that's why exactly valuation matters. I do not need Adobe to become a hyper growth company again. Okay. I don't need 30% revenue growth. I don't need some insane AI miracle. Okay. I just need this business to remain strong enough while the market prices it like it's completely broken. This is the setup that I like. A very successful company, a very good business, huge moat, deeply embedded, and a very bad stock chart. Okay. And a management team that is still trying to make the machine stronger. So now we're going to stop talking about the story and we're going to look at the numbers. We're going to go back into stock analysis. We're going to look at all of the numbers: revenue, margins, free cash flow, returns on capital, share count, buybacks, balance sheet, valuation last, and then we're going to decide whether the numbers actually support everything that I just said. All right, so let's get to work. Adobe stock, we're on stockanalysis.com here. And as you can see, 4D, it's around 10. Non-GAAP, of course, but the actual P is like 14, 15. So let's take a look at this financials tab, which is a new tab and a new feature in stock analysis. Last 10 years, I mean, just looking great. I mean, it's looking unstoppable. It's beautiful. I like what I'm seeing here. Revenue, as you can see, it was 2023, 10.2%, and then 10.8%, and then 10.5%. Trailing 12 months, last quarter, it was like more than 11%. Okay, 11.5. That's an acceleration in revenue growth. Okay, 2026, AI has already been here. Image generation has already been here for years. AI slop, sure, it's getting better, but I mean, I'm not seeing this business cracking yet. I mean, I was happy to see something like 9% revenue for 2025 and something like 8% revenue in 2026. I see this and I'm shocked. 11%. I'm very happy to see this. Revenue by segment, like I said, we talked about the stacks before. We're gonna go into KPIs as well. But yeah, let's just look at the income statement. So shares outstanding, diluted. Let's take a look at last 10 years. So basically, you can even look at the last 20 years or the max data that the sites. You have here the data source that you can change. So fiscal.ai, I think, offers like 20 or 25 years or something like that. But you have NASDAQ, which goes back to the 80s, and you can look. I don't know why you would, but if you want very long-term data, maybe you don't have such a high-tech company, a company that moves a bit slower and doesn't really change much, and you want to look over 30 years what it's been doing, you can change the data source. This is why I like stock analysis so much. I highly recommend you get a pro subscription and use all of these features. But yeah, last 10 years, since 2021 mania, price has been going down a lot. And guess what? The buybacks have also accelerated and the share count started to reduce drastically. Why? I mean, look at this. Last year, minus 5%. This year, probably minus 6% or even more. Why? Because the stock price is cheaper, is lower, and the purchasing power of Adobe is higher. So the free cash flow, I mean, look at this. $10 billion last trailing 12 months. I mean, look at this. 8 billion in 2024. Last year, 10 billion of free cash flow. I mean, that's just crazy. More than 10 billion. I mean, they will probably end up the year with like 11 or 12 billion in free cash flow. Let's take a look at the gross margin. Are they declining? Last year, 89%. This year, 89.4, a little bit higher. And this is great. Excellent. This is exactly what we want to see. Now, operating margins, it's going to fluctuate a little bit more, but last year it was like 37%. This year is 36%. This is obviously has a lot of other stuff included. Acquisitions can affect this stuff. Free cash flow around 40%. Great. 40% combined with 10% top line growth. That's the rule of 50, which is stupid, but I guess you can say rule of 50. But yeah, I don't see any problems in the numbers. Let's take a look at the balance sheet. Cash and cash equivalents around $5 billion still after doing a lot of buybacks. I'm going to show you the buyback numbers. This is great. They haven't depleted their cash balance sheet. The balance sheet is like a fortress still. So total debt went up quite a bit, 7 billion, but nothing too crazy for this company. It's just nothing. The business is growing and the net cash is negative, but not by a lot. 1.4 billion is nothing really for this company. And the interest coverage is like huge. So debt is really insignificant. Net income, last year, 7 billion, trailing 12 months, 7.2 billion. Hopefully we can break 8 billion. And as you can see, companies growing higher, more and more and more each year, each quarter, actually. If I show you, let's take a look by quarterly. Look at that. It's somewhat smooth. And we're going to look at the free cash flow by quarter. Not so smooth. But yeah, let's take a look at the revenue by quarter. I'm very interested to see. Look at that. It's beautiful. It's pure 45-degree angle, just going straight up. What more can you? Sure, it's not exponential growth, but can you argue with it? Can you see any AI permanent impairment to the business? Can you see the Canva and Figma competition coming here? Look at this. They announced they wanted to buy Figma in 2022 or so. It was pulling in like 4 billion back then. Now it's pulling in more than 6 billion, almost 7 billion. Next year, it's going to be more than 7 billion every single quarter of revenue. Okay. So has the business slowed down? Was Figma a threat? Look at this. So be very careful with all of the bear cases and the news headlines. Do the deep research yourself. Go into the numbers, look at them, and that's how I sleep very well at night, because I know the numbers, I know what they mean, and I know what the company is doing and where it's headed at. So let's take a look at net common stock issued and repurchases. So they repurchased $11 billion. Net common stock issued is minus, let's just say 11, okay? So net repurchases, almost $11 billion. And trailing 12 months is already at 9 billion. Hopefully they can end the year with more than 12 billion in repurchases. They probably already did a bunch of buying when the share price was really low, like 200. Look at this. This is a very shareholder-friendly company. Yes, they have a lot of stock-based compensation, but the stock buybacks are much higher than that. It's like 4 or 5 times higher. So yeah, they're gonna do like 2 billion in stock-based comp this year, and if they do like $12 billion in buybacks, that's effectively $10 billion invested into buying back shares, and we're looking at the market cap of 100 billion. That's 10% of the market cap retracted. That's crazy. Management realizes, yeah, we don't need to invest in AI and do some crazy capex, and we're just going to buy back stock. Our business is stable. So don't look at the buybacks as something like a dividend yield. Don't go for yields, okay? Look at it as a sign of strength, okay? Because the management says, we don't need to pay down debt. We don't need to make some other investments. Yeah, AI is here. We're doing fine. We're just going to buy back the stock. So this is what you want to see. Market cap completely destroyed, 300 billion down to 100 billion. Exactly what you want to see. P ratio down in the toilet. Last 10 years, the high was, let's just say, in the 50s, 61, very, very high. Now it's down to 15. Huge up. PEG ratio. I love this ratio. This is the Peter Lynch ratio. Extremely low, 0.7%. So anything that gets under 1. So the PEG ratio takes the price to earnings combined with growth. And anything under 1 or 1 is, let's just say 1 is fairly devalued, like 2 might be expensive, and anything under 1 for such a high growth, high quality company is just ridiculous. Yeah. What else can we look at? EV to EBITDA in the toilet as well, decade low. FCF, let's take a look at ROIC, return on capital employed, and return on capital invested. Look at this, all-time high, trailing 12 months, close to 60%. If we ended this year with like 65, 70%, I mean, that's a huge, absurd number, okay? This is ridiculous. This is a compounding machine, is a monster, okay? Also, the whole entire company is extremely efficient. Look at this, more and more and more efficient as years go by. We're at 50% ROCE, and that's crazy. When I started investing in this, it was like in the 30s, okay? 2024. I didn't put a lot of money into it. I jumped the gun in 2025, and this year I just want to go all in, but I would get bored just owning one company, but I wouldn't mind just owning this. FCF yield 10%, just crazy. I mean, it's just 10% of the complete market cap is coming into free cash flow every year. 100 billion in market cap, 10 billion in FCF. It's just crazy. And yeah, the total shareholder return is going to be, I don't know, this year, if we end up with 7 or 8%, I mean, that's just going to be crazy for a high-tech company with margins in the 90s and operating margins in the high 30s. I mean, that's just crazy. Let's just take a look at KPIs, because we talked a lot about digital media and experience and other products. So digital media subscription revenue. So this is the Creative Cloud, okay? And you have the digital experience, and then you have the publish and advertise. This is the document stack, but let's take a look at some other KPIs. Revenue breakdown, cloud revenue, document revenue. This is it. So they stopped reporting it in 2024. So the document revenue was cloud and everything was bringing in about 3 billion a year. And the digital media revenue that same year was getting about 17 billion. No, in 2024, let's go back, 15 billion, okay? And the Creative Cloud was bringing 12 billion. Total, 21 billion. Shame that we cannot see what the cloud revenue, the document cloud is bringing in this year or even last year. I don't know why they stopped reporting, but yeah, publishing and advertising isn't the whole story. You need to look at the document cloud. It's a very strong part of the company. So, I mean, Adobe could come out tomorrow and say, we're just going to sell Photoshop to Microsoft, okay? And everyone is going to scratch their head how they're going to make their money. I mean, look at this. Document cloud revenue, digital media revenue. Adobe is not Photoshop, like I said. What else can we take a look at? That was pretty much it. I mean, we covered a lot. Forecasts, not really interested. I don't listen to forecasts or what the news say or anything like that. So yeah, you have fortress balance sheet, gross margins intact. This is not a deteriorating company. I'm very, very happy to own it. And that was pretty much the video. See you guys in the next one.